For that, we want to welcome in our next guest, Dan Ives, Managing Director, Equity Research, Wedbush Securities. Dan, it is so great to talk to you. You know, we always love having you on. I saw you out at a conference recently. I saw pictures of you, I should say. I wasn't there. But let's talk, and you look like you were having a great time. But let's talk about the rate cut, the 50 basis point. A lot of people were not expecting that. I'll confess, myself included. Were you expecting 50 bips or were you in the 25 camp?
I mean, our view is this was going to be the Fed ripping the Band-Aid off. I mean, you know, in terms of cutting 50 bips, I think was a huge first step to what's going to be just a massive dovish stance over the next 12 to 18 months. And for tech investors, that's a risk-on trade. It's bullish. That's why today a lot of those bears that have been out for the last month after, you know, a few years in hibernation mode, they're going back into those caves this morning.
It certainly seems that way. I mean, you've got markets hitting new all-time highs today. We're looking at the S&P 500 continuing to advance, NASDAQ 100 really rallying today. How does this impact the AI trade in your view through the balance of the year?
Oh, I think tech rips higher. I mean, rest of the year. Look, first off, you have $1 trillion of AI-driven CapEx coming to tech over the next, call it, 3 years. And that fundamental story, I mean, we just got back from Asia, and that's accelerating, not decelerating. So I think it shows demand's outstripping supply 15 to 1. Tech AI names, I believe, rip higher into year end. And I think going 2025, now you're going to see more second, third derivatives of that trade, and even small caps starting to participate. Now, I continue to believe it's 9 p.m. in the AI party that goes to 4 a.m.
In the whirlwind world of stock markets, the name Nvidia has been generating buzz once again, and analysts like Dan Ives are telling the bears to go back to hibernation. After a remarkable 150% surge in the first half of 2024, Nvidia faced a slump as rumors about its new AI chips began to swirl and investors grew uneasy. Yet recent developments and high-profile endorsements might just be turning the tide. Notably, Nvidia has key players like Microsoft, Amazon, and Oracle rallying in its corner. Let's delve into why Nvidia stock could be primed for another record-breaking ascendancy before the year is out. But what exactly is driving this optimism? And how do the intricate dynamics of the tech world play into Nvidia's storyline? Let's explore further. Nvidia's historical performance and influential market presence have always caught the eye of stock enthusiasts and analysts alike. Whether it's the steady rise in computational demands or breakthrough AI applications, Nvidia's innovative prowess stands at the technology frontier. In assessing why it remains a juggernaut, it is essential to unpack the series of strategic moves and market conditions that continue to steer its stock price. Welcome back, everyone, to Investocracy.
So it goes to 4 a.m. What, you know, we've heard the analogy before in terms of innings for the AI trade. Are we still in the early innings from your view? Because you had started to see some commentary about, okay, things are maturing. Are we going to start to see the second case, the use case for AI? And that's kind of what investors were looking to hear more of. Okay, what's the use case now?
Yeah, and that's what, look at the Messi of AI Palantir. I mean, that's front and center in terms of the use cases. Use cases are exploding today. I mean, we have 4x the amount of use cases than we did going back, call it 4 or 5 months ago. That's why you see in the strength in ServiceNow, Oracle. I believe ultimately you'll see strength in Salesforce and a lot of other software names. Because now the use case, the software phase of AI is starting to play out.
Let's talk a little bit about Nvidia. The shares are higher, as I guess can be expected today, especially when you see this big risk-on trade. What does that tell you about where Nvidia stands and, you know, kind of some of the naysayers recently?
Yeah, the haters are going to hate. But I mean, we just got back from Asia, and demand continues to accelerate. And like I said, demand's outstripping supply 15 to 1. You start to look at Godfather of AI, Jensen Nvidia. This is just the start of the AI revolution. We believe a year from now, Nvidia is a $4 trillion market cap.
Nvidia's journey has been nothing short of extraordinary. In the ever-volatile stock market, it is companies like Nvidia that keep investors on the edge of their seats. After hitting a snag mid-year, rumors began circulating about potential delays in the release of their latest data center AI chips. These whispers left analysts questioning the longevity of Nvidia's dominance as its top customers appeared to reconsider their billion-dollar spends on AI. However, could the storm be clearing? According to the company's recent announcements, Nvidia's unveiling of its new Blackwell GPUs has reignited investor optimism. The new architectural marvel, the Blackwell-based GB200NVL72 system, promises to outperform its predecessor, the H100, by a staggering 30 times in AI inference tasks. Priced between $30,000 and $40,000 per GPU, it offers unprecedented cost efficiency, which is likely to set off a frenzy among data center operators. CEO Jensen Huang's remarks provide a wealth of insight into the potential impact. He highlighted that global data center operators could spend a staggering $1 trillion on GPU infrastructure over the next few years. In a striking statement, Huang mentioned that Nvidia's GPUs could generate $5 in revenue per every dollar spent by renting computing power to AI developers. It's no surprise, then, that technology behemoths like Microsoft, Amazon, and Oracle are in a headlong rush to procure as many of these chips as possible. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
$4 trillion market cap, I mean, that's a huge statement to make. What's the thesis behind that for NVIDIA hitting that level?
I mean, look, you have $1 trillion of AI-driven CapEx. They're the only game in town. Numbers, we believe, go up significantly higher. I think the street's still underestimating in terms of what ultimate demand looks like here. And I think as this all plays out, it is not an expensive stock. And I think when you look next 6-12 months, not just about NVIDIA, but I think rest of tech, we believe tech could be up 25-30% over the next year.
Can AMD catch up at all to NVIDIA?
Look, Lisa Su, you never bet against her. I mean, they will be a clear beneficiary in terms of on the chip side. I mean, a lot of that we won't see probably for another 18 months. But I don't believe a lot of that AI is being built into AMD. I think AMD is going to be a clear beneficiary. And look, this is a big enough ocean for more than two boats. I mean, we are seeing a 1995, almost 1996 moment, but this is not a 1999 tech bubble moment. And I think that's why a lot of the bears are going back into hibernation mode.
NVIDIA's performance numbers are equally riveting. The financial figures for the second quarter of fiscal 2025 reported a record $26.3 billion in data center revenue, an astonishing increase of 154% from the previous year. This growth could have been even more astronomical if not for supply constraints. These numbers not only silence critics, but also paint a vibrant picture of NVIDIA's robust demand. Stock market enthusiasts will appreciate the nuanced valuation story that NVIDIA presents. Despite trading 15% below its peak, NVIDIA's stock valuation based on its trailing 12-month earnings per share of $2.20 places its P/E ratio at 52.5. This might seem steep when compared to the broader tech sector's 30.8 P/E ratio, represented by the Nasdaq 100. Yet, the forward-looking nature of the market paints a different picture. Wall Street forecasts NVIDIA's fiscal 2026 earnings at $4.02 per share, reducing its forward P/E ratio to a more appealing 28.7. Microsoft's, Oracle's, and Meta Platforms' plans to amplify their CapEx spending on AI underscore the bullish sentiment surrounding NVIDIA. Their status as vital NVIDIA customers provides a degree of certainty to NVIDIA's potential financial outcomes next year. It's not just about the present, it's about the long-term horizon that makes NVIDIA's stock particularly enticing. Taking all of these factors into account, the prospects for NVIDIA's stock make it a tantalizing option for investors primed for future gains. Investing in NVIDIA, therefore, isn't merely about riding the current wave, but envisaging the growth trajectory rooted in technological advancements. As the AI landscape continues to evolve, NVIDIA is likely to remain at the forefront, shaping the future of computing and data systems. The company's strategic moves, partnerships, and ongoing R&D investments signal a strong commitment to maintaining its industry-leading position. For those watching from the sidelines, now may very well be the opportune moment to join this thrilling ride. The market's dynamic nature teaches us that opportunities like these don't come often, and when they do, they can redefine an investor's portfolio outlook. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So you say the bears are going back into hibernation mode, but is this just a moment? Because there have been critics who say this is, they worry about a bubble for AI. Why aren't you worried?
Because we see the spending. I mean, you see the use cases. I believe this is the biggest transformation we've seen in tech in the last 35, 40 years. It is a fourth industrial revolution playing out. This is not hype. It is real. And I think we see that more and more with data points, whether it's Oracle, Palantir, ServiceNow. We see it, but I believe Salesforce and others. This is just the start of this AI revolution, obviously being led by Godfather of AI, Jensen, Nvidia, Nadella, and Redmond, but it is not stop. It's not stopping. And also, the bears have hated this rally for the last 2 years. And I think it's just going to be another painful year ahead for the bears.
Nvidia currently finds itself trading below its record, but poised for a potential leap. With the impending rollout of the revolutionary Blackwell GPUs and unwavering demand from tech giants including Microsoft, Oracle, and Meta platforms, the future looks promising. As Nvidia keeps pushing the envelope on AI and data center technologies, the stock holds vast potential to surge past its previous high of $135.58 by the end of 2024. So, what's your take on Nvidia's latest advancements and the market's dynamic response? Do you foresee Nvidia rising to new heights, or do the headwinds appear formidable to you? Share your thoughts and join the conversation in capturing the pulse of the stock market. Whether you're a seasoned investor or a curious observer, the evolving Nvidia narrative is one that you cannot afford to miss, as it continues to shape the contours of tomorrow's technological landscape. Engaging in these discussions not only provides diverse perspectives, but also deepens our understanding of market fluctuations and future possibilities. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.